G'day, Binanceans, and welcome to this week's episode of Binance Beach, the weekly Aussie crypto briefing designed to keep you in touch with markets, with price action, with the local industry news, and we're giving you expert takes on the current issues in crypto and in Bitcoin. Today, I'm going to be flying solo again, and we're actually going to be running an episode today which won our Binance Beach Learn and Earn suggestion competition last week. So a big thank you to Ethan, who has taken home one BNB, who suggested that we do an episode about the possible scenarios for crypto and the different market conditions that we might encounter over the second half of the year. The bullish scenarios, the bearish scenarios, maybe neutral market scenarios as well. And we'll be looking at what some of those bullish tailwinds are for Bitcoin and crypto right now, and what some of the bearish headwinds might be for crypto right now. So I'm going to run through this today. One little caveat before I kick off. I'm not a macroeconomist, and these are really complex topics, a lot of the things that I'm going to talk about. And so I'm going to do my best to first stay in my lane, and secondly, to keep it simple. So please leave me some feedback if I helped make these concepts and pretty complex things easier to understand. And let us know how we can keep improving and doing better. We're definitely going to have more awesome prizes to give away soon. One person who leaves some feedback on this episode, and that could be on Twitter, on Instagram, or on YouTube, will win tickets to the Australian Crypto Convention. We've got 2 tickets to give away this week, so please let us know how the episode is, and we will reward you with some tickets to the Southern Hemisphere's biggest crypto meetup. But let's kick into it. A quick caveat, I am actually recording this episode on Thursday. I have a bit of a crazy day tomorrow, so we're getting this out a little early. Bitcoin price has been pretty choppy and sideways this week. We're sitting around just under the $61,000 US mark. We did hit 61K briefly this morning, but we're sitting just under that mark now. But instead of going into the kind of micro week-on-week updates, I'm going to zoom out and I'm going to take you through, again, what are the bullish tailwinds that we have right now? And what are the things that could be really positive market catalysts? What could drive up the price of Bitcoin? And then we'll run through some bearish headwinds, things that could drive the price of Bitcoin down for the rest of the year. The first thing that I want to cover off are the spot Bitcoin and, by connection, the spot ETH ETFs. These obviously had a pretty bullish catalyst for Bitcoin when they were approved late last year and started trading in the early part of this year. I think it was basically first thing back in January after the Christmas break. These are really bullish for Bitcoin and for crypto because they drive institutional adoption. And what you can see here, thanks to this chart from the block, is the spot Bitcoin ETF flows since their launch in January through to the current day. Clearly, the more institutional adoption and as a result, the more buying pressure that these ETFs drive for Bitcoin, then the more bullish this is for Bitcoin and the more this will create buying pressure and drive the price of this limited asset up. It's pretty simple to understand this, but clearly there's some really there's some very profound impacts that these ETFs can have. There's an enormous amount of capital that exists across a number of different industries, like in Australia for super funds, but across pensions, retirement accounts. Globally, there are so many places that capital is currently being invested across traditional assets, across real estate, across stocks, across bonds. And now they have a tool in the US specifically, which has access to Bitcoin. So this is definitely one to keep watching for a bullish catalyst. And if we see really strong flows into this ETF products, especially the Bitcoin ETF products, then that's going to be a really strong tailwind for Bitcoin for the rest of the year. The second thing that I'm watching in terms of bullish catalysts could be rate drops. Now, in Australia, our core inflation, or CPI, has ticked back up. And so that potentially has some economists suggesting that we might have a rate hike this year still to come. But the consensus seems to be in the US that there could be rate cuts heading into maybe September. The reason that this is bullish for crypto is that when we have rate cuts due to a weakening economic environment, that frees up global liquidity. It makes the cost of borrowing money cheaper. And generally, it's a good sign for risk assets. Again, I'm not an economist and I'm going to try and stay in my lane here. So definitely refer to more well-read and more well-researched experts when it comes to macroeconomic factors, CPI and the labor market. But it is definitely something that we're looking at for the remainder of H2 when we consider what might drive a more risk-on environment, which is, of course, good for crypto, or what might limit and move people back to more safe haven assets like bonds and gold. The next thing that could be a bullish catalyst, let me talk quickly actually about the difference between AU, Australian, and US inflation and why we've been covering US inflation on this show. We had a few bits of feedback that we have focused on some US metrics rather than just Australian metrics. And I want to touch on why that's important. The US is the biggest market in the world. The US has the most capital of any market in the world. The US has the Federal Reserve, which leads monetary policy across the world. And so even though for us in Australia, how our Australian CPI is tracking is very important for us from a day-to-day cost of living perspective. If we have houses or mortgages, or we're taking out loans to buy things like cars, then the interest rate impacts us day to day because we might have less capital to invest. We might have less money at the end of the week to invest if CPI keeps going up. And as a result, our interest rates stay high. But in terms of global liquidity, we want to be tracking the US. We want to be looking at the US, and that's more likely to drive a global market like Bitcoin than a local market like Australia driving that global market, or a local interest rate cut or a local interest rate hike. So it matters a lot for us and our cost of living and our weekly expenses if our interest rates stay high or go up even further and our CPI or our core inflation stays high. But for global markets, we're tracking the US. So that's why we keep covering those on this show. This graph or this chart does show that the US CPI or US inflation index does seem to be back under control around that 3% mark, and we're not seeing the uptick that we're seeing in Australia. So again, we'll be watching this. There was a really interesting announcement this week on the US labor market. This impacts interest rates because a weaker labor market is likely to encourage the Fed to potentially cut rates in September, a weaker jobs market indicating a weaker economy. So there was almost 820,000 fewer jobs than was initially forecast by the Bureau of Labor Statistics in the US, which means that it is a much weaker labor market, much weaker economy. There's an interesting adage here, which I hear from some leading voices in this space, that in this sense, bad news is good news. This is clearly bad news. People who have lost their jobs or been unable to find jobs, that's really hard. It's really devastating for you as an individual. But when we look at the market more broadly, that bad news means we're more likely to see a rate cut in September, which for markets is sometimes good news. So worth keeping in mind that sometimes this bad news is good news when it comes to the macroeconomic stuff. Again, I'm not a macroeconomist, so please do some further research before making any decisions based on just these few factors. The next really interesting part of the cycle this year and what might drive the Bitcoin price in H2 is, of course, the US election. Again, the US is the biggest market in the world. It has the most capital of any country in the world. And so who leads this country, who is elected to president of the United States, is going to have a really significant impact on our crypto markets. We've obviously seen Trump at Bitcoin 2024 conference and more broadly be very bullish on Bitcoin, or at least bullish on Bitcoin policy. He's engaged quite well with the industry of late. And so it's potentially going to be quite bullish for our industry and for Bitcoin as an asset if Trump is elected. That's likely to be quite a bullish tailwind for us. One of the reasons why this could be is because of Trump's positivity towards a strategic Bitcoin reserve. And of course, we have seen this Bitcoin Act announced already by Senator Cynthia Lummis, and it's likely that the Trump presidency would help push this through and move it into action. Of course, this is really bullish. This is an enormous tailwind for Bitcoin because nation state adoption is the next big hurdle that we're looking at. It's the next big player in this global capital ecosystem that could adopt Bitcoin and help to drive this as an asset class, drive the credibility as an asset class. So nation state adoption is going to be huge for Bitcoin. You can refer back to our episode, Binance Beach episode number 5 with Adam Stokes, where we talk about this in a lot more detail and we digest the updates from Bitcoin 2024 conference. The final thing, which I think is really bullish for crypto at the moment, is, of course, our actual fundamentals and our innovation. If I take a look down, and I'll move quickly to the crypto projects that we have in the ecosystem at the moment, there's lots of really interesting and really innovative stuff happening across both Ethereum, across the Solana ecosystem, across the Telegram and Ton network. There's a bunch happening here. And of course, fundamentals and innovation is really, really exciting for our space. We are still very early. A lot of these products are yet to reach true product market fit. We've got some really interesting stuff that's right on track, is getting really strong usage. And this is definitely a really, really key one to watch. In terms of how we keep a track of that, Bitcoin dominance is one really interesting metric to look at. Bitcoin dominance signals the market cap of Bitcoin versus the market cap of all of the other crypto assets. And this is generally a good indicator of whether the market is risk on or has a higher tolerance for risk, is making higher risk plays, or whether the market is within crypto risk off. And we've got more capital sitting in the quote unquote safest or most the largest crypto by market cap, which of course is Bitcoin. When we see a high Bitcoin dominance, it's generally indicating that we are in a lower risk environment. And when we start to see the market cap of the altcoin side of this equation start to grow consistently or significantly, then we're in a more risk on environment, or investors are willing to take more risk and push capital into the altcoin markets. Of course, as well, when we're watching this, the Crypto Fear and Greed Index is another really interesting metric to keep an eye on for investor sentiment. We see that often this peaks around market highs. In this chart here on the right-hand side, of course, you can see that this greed index peaked right around that March all-time high. And sometimes when this fear and greed index dips down to fear levels, then that can signal market bottoms as well. So keeping an eye on this metric is a great way to get a sense for investor sentiment and use that to help inform your macro trading strategy. Well, that's positivity. That's what could really drive our Bitcoin price forward over the rest of H2. Let's take a look at a few of the bearish headwinds that we have coming down the pipeline for us at the moment. The first, of course, is recessionary fears and the stock market at all-time highs. Right now, 5 stocks in the S&P 500 make up 29% of the market, which has previously been an indicator for a market top in traditional markets. So this is definitely one to watch. I'm not going to make any forecasts here based as to whether I think we're going to have a recession or not. I'm definitely not qualified to make those predictions. But clearly, if we do move into a recession, this is going to be bearish for crypto and for risk assets. So watching the stocks market, watching the economy more broadly is going to be a really important one for any crypto investor, as it will be for any investor for the rest of the year. The next bearish headwind, of course, is geopolitical uncertainty and conflict. I'm not going to go into this in detail, but Clearly, this is something that could disrupt markets, could disrupt trade routes globally, and it's going to be pretty bearish if we do have a significant disruption here. For us in Australia, in terms of headwinds, of course, another RBA rate hike could be pretty restrictive for us. The more we spend on our mortgages each week, the higher the cost of money in this country, the less disposable income we have at the end of the week to invest or to to spend on whatever you'd like. So for us in terms of Australia, definitely there's a bearish headwind for continuing high inflation, and definitely that will make it harder for us to free up income to invest in whatever you'd like to invest in. Globally, there's still a lot of regulatory uncertainty in many markets, and this makes business building more challenging. This is definitely one to watch. We see a lot of positive movement, and Binance takes great steps to engage with local regulators, with local licensing requirements. And we are the most licensed crypto exchange in the world, but it's still a real challenge for particularly a lot of businesses building on the front edge or the leading edge of innovation. And that's definitely one to watch. The final bearish headwind is black swan events. I think these are important to include as well. A black swan event is an unpredictable event that is beyond what's normally expected of a situation and potentially has severe consequences. Examples of these black swan events include the housing crisis of 2008 and the large market crash that followed it, the COVID-19 pandemic, the September 11 attacks, hyperinflation in Zimbabwe, these kind of large, unpredictable events. So we never know when one of those is going to be coming along. Let's obviously keep an eye out for those kinds of market factors and make sure that we're not over-leveraged or over-reliant on high-risk players. I want to finish this episode with a bit of a lesson or a bit of a takeaway. Don't fumble the bag. It's the title of the episode. And I think whenever you're looking at markets, it's really important to stay zoomed out, to stay within to make sure that you're not using too much leverage or you're not leveraged at all, and make sure that you are comfortable with your trading strategy. Understand that as we see more and more money introduced by governments or by central banks, that it's going to be moving into assets. That we're going to see assets continue to inflate, and inflation continues to be a problem that we tackle here in Australia and across the world. But when you save in Bitcoin, or when you look at Bitcoin as a long-term store of value, this is how you can potentially protect your purchasing power. And this is really the thesis behind Bitcoin as a long-term asset. When you have more money chasing the same amount of stuff, it's likely that the prospect for this asset class will be quite good, and the prospect for Bitcoin will be very good. And I'll finish off with a post from the Binance Inc. intern. I love this. It's a hard thing right now, and it might feel very hard, but zoom out and you'll be able to continue to make good decisions with your investments over the longer term. Stay comfy. That's all for my episode today in terms of market predictions and bullish and bearish market outcomes. I want to talk about a couple of quick other things that we've got going on here at Binance. Of course, we have a more bang for your Bitcoin campaign right now. You can get up to 60 USDT in rewards for making trades, depositing, and referring friends to Binance. Another awesome opportunity is to come and work for Binance. We are hiring a new intern in Australia and New Zealand to join our marketing team. So if you would love to join the team and look at getting your foot in the door as a student or graduate who has studied business, marketing, or finance, then this could be a really great role for you. Please check out our Twitter and you'll find it there. I'll finish with a disclaimer. Please note this discussion includes insights from non-affiliated third parties and key opinion leaders. Binance provides this platform for informational and educational content purposes only and isn't responsible for any of the content or insights provided. The information should not be considered as financial, tax, or investment advice from Binance. Thank you so much, Binanceans. Again, please leave us some feedback in the comments on Twitter, on Instagram, or on YouTube. And my favorite piece of feedback, the best piece of feedback, will win 2 tickets to the Australian Crypto Convention held in Sydney later this year. Stay tuned and we'll chat with you next week. Thank you so much.